An institutional market overview for gold on the H1 timeframe demands precise execution, framing critical high-probability liquidity pools to navigate complex algorithmic volatility successfully, identify strategic imbalances, and secure structural order flow alignment with absolute market precision. Please watch the full video. The structural landscape reveals a dominant bearish trend, established through consecutive lower highs and lower lows, confirmed by multiple bearish breaks of structure. However, a significant liquidity sweep occurred at the major lower demand zone between 4,040 and 4,080, sparking a strong institutional reaction. Price has rallied to 4,218, currently interacting with immediate supply. Until key structural levels are breached, the overall higher timeframe bias remains neutral to bearish. We have mapped two distinct execution plans based on upcoming liquidity constraints. For the upside scenario, our focus shifts to 4,255. Our focus is on this entry zone. We are waiting for mitigation here. Once price action confirms, we can expect the move to start. Our invalidation level is strictly set at 4,170. If price breaks this, our bias changes. The market objectives will focus on clearing buy-side liquidity, targeting Scenario 1 at 4,310, Scenario 2 at 4,425, and Scenario 3 at 4,520. Conversely, if the current supply holds, we anticipate a structural breakdown. The pivotal level is 4,165. Our focus is on this entry zone. We are waiting for mitigation here. Once price action confirms, we can expect the move to start. Our invalidation level is strictly set at 4,255. If price breaks this, our bias changes. This trajectory seeks sell-side liquidity, reaching Scenario 1 at 4,080, Scenario 2 at 4,040, and Scenario 3 at 3,980. Smart money will likely trigger expansion once external liquidity pools are tapped. This is an educational video, not investment advice. Follow for more, the next analysis is coming very soon.